Marius, welcome. Francis Mitchell, nice to see you. We've got a lot of Pattern Trader members as well as some new blood, so to speak. So welcome everybody. I gotta admit, I performed a bit of magic yesterday. I kind of predicted everything that was going to happen yesterday happened today. So we'll kind of talk about that. Mark, Eduardo. So we're right on the half hour. I'll give this about another 30 seconds and then we can get started. Sean, how are you? All right, so why don't we get cracking? So welcome to the second of the 3-day live trade execution webinar series. My name is Mark Shawson, the Pattern Trader. If you weren't on yesterday, I basically introduced my methodology, my approach, which is exclusively based on observing price and price action on the markets. And in yesterday's session, so, it's not like I'm coming back today and said I would have done this or I would have done that. I said that it's likely that Fed Chair Powell, he spoke today at about, a little ahead of 1 p.m. Eastern time, talk tough. The market sold off as I anticipated, and then the markets rallied. And then yesterday, I also talked about Microsoft, and I said this stock was a real comer, and Microsoft was up 5% today. So, maybe a little bit of magic. And then I actually said that in my outgoing email. This is an email that I send out to those members who are on our elite program. If you want to know about our elite program, I'll share a little bit more information at the end. And I said, this was yesterday, Monday, February 6th. And I said, tomorrow and Wednesday, Fed Chair Powell is giving testimony. He's expected, he'll be more hawkish in his rhetoric than he was last Wednesday, and the market could sell off. The market underpinnings, the price underpinnings appear bullish. And so this could represent a buying opportunity. And this is exactly what happened in the market. I bought puts earlier in the day when the market rallied, and then it sold off. And I made about 3 times my money on those. And then I bought into the sell-off and I made about 70% on the pullback. So, traded a little bit more actively than I care to. This was the setup in Microsoft. Going into yesterday, we had a bit of a sell-off, but I said that this was just a reprieve in what I thought was a bull market. And you can see that, in the elite program, I share not only, this isn't a signal program. A signal program does you no good. What I try and do is share my way of looking at price. And you can see that I put the price chart on there. I showed that there was what I call an even atom double bottom, which then led me to believe that prices were going to go higher. And I said, put a buy stop above yesterday's prices. Prices opened above the buy stop at 260 and closed at 268. So up $11, up 5% for the day. And I said, Microsoft has formed a double bottom bull, so I believe it will resume the uptrend. Penetration above yesterday's narrow range bar would result in momentum to the upside. So, and these were the positions going into today. I had a long position in Qualcomm, a long position in Bank of America, a long position in Workday, and all of these positions rose pretty exponentially today. So this is the value of being a member if you are interested in this. So with that said, I did a bunch of things. I didn't have time to put everything up here. Let me just get out of this. I really, and it made me look like a lunatic trader today. I was kind of in and out. I'll just share with you a couple things. In the sell-off, I bought the call options at 166 today, the 310s, and I blew out at 280. The call option is a bet on the upside. I also bought Microsoft and Workday, and I just didn't have enough and I bought puts, and I kind of had a crazy day. But I also bought Amazon. So everything was when the market sold off, I kind of saw this as an opportunity to buy the triple Qs. And then I also looked around in the garbage bin and saw what was kind of lagging and surmised that if the market sold off and came back, that I could get a pretty good bump. And I found Amazon. And I'll share with you what I saw in Amazon. I bought it right around the low of the day when the calls were at 136. I had a 290 kind of trade execution. It closed at 225, and I'm closing the day with a 65% gain. Now that could all get wiped out tomorrow. I also bought some of the indexes today, and we're trading around a resistance area, so I'll probably trade that position pretty closely. But I did a bunch of other things, and it doesn't really matter what I do. This is the stock indexes. I said I would talk about the metals today, but I'll just kind of recap what we talked about yesterday in the indexes. On the top chart, we have a daily chart of the S&P 500. And on the bottom chart, we have a chart of the triple Qs, which is the NASDAQ. I probably should have started with the weekly, but I just wanted to show you what the price action looked like today. So what happened was we started out when the Fed started, when Chairman Powell started speaking, the market started rallying. Then it got to this resistance level early in the day. And I bought some puts here, surmising that this resistance level would hold. Then the market sold off, and then it grabbed a foothold and went right back up. So that was kind of the intraday action of the market. But again, I said yesterday, this is exactly what was likely to happen. Again, here's my comments. I said that you'll hear some hawkish rhetoric from the chair talking about that he's going to hang tough. In fact, I took some notes. It said, we're going to react to data. And if we see a bad unemployment report, we're going to act accordingly. And then he said, we also may have to raise rates higher than indicated. So when he said both of those things, the market just, sold off. But here's the thing, the market is a discounting mechanism. And this is basically what I said yesterday. When you have a bullish environment, you could get bearish news, the market will absorb it and then go back higher. And so it's not about the news. If you're trading off what he said, then by the end of the day, you were a big loser. So you have to understand the environment, you have to understand the trend, you have to understand the price action, and the news and the information is discounted and absorbed in real time. And so by the time you're reading about it in your newspaper tomorrow, the market's already taken off. So what I try and do is look at the patterns that are going to lead to the next trajectory of prices. So right here, prices got to an all-time low back in October, bounced off that low, retested the low, and then we formed this bottom. And this is, for now, the governing price pattern. And what I mean by governing means it is governing and dictating the price going forward until we see the appearance of another pattern that may or may not turn this around. But for right now, this is a big, bad bull market. And, everybody was caught off sides. The thing is, the market is about perception and psychology. You can look at Apple's reports, you can look at the cash flow, you can look at their anticipated sales for, iPad or iBook or whatever it is. And the market has nothing to do with that. It's all about psychology and perception. And that's why I only look at price, because price tells us ahead of time. You can see that we are in a very nicely established little trend line here. Now we're bouncing off, key resistance area here, and this could be a lot of turbulence in here. And by tomorrow, I could be looking at something like this and saying, this is over. And so I look at price action, and it's a dynamic process. But that being said, price led me to believe that we were still going to go higher, and it still looks like it could be turbulence in here, but the path of least resistance is higher, which is what I said yesterday. Here was the S&P, and you came exactly to the nose, right where this has bounced before. You sold off this morning right on the nose and then bounced off there. Now, this is why I bought Amazon. Amazon bounced off an uptrend like this, and I just blindly bought into that. So these markets, people say, well, do technicals work? Well, I would submit to you, if you're looking at this, you can see how these markets bounce off these ranges all the time. So, price is a guide, and I use, price action. I look at, how something closes relative to the high and low. I look at patterns. And right now, the patterns in these markets indicate that there's more left to go. But there is, history. And whenever you start bumping up against old history, it starts, this 4,200 is going to be, a significant headwind. So when you start kind of hitting this area, it's going to, likely push back. So again, I'm just trying to introduce you to a way of looking at trading that has nothing to do with understanding the market. People think, well, I have to have, an economics degree. I have to understand finance. I have to understand how to read a balance sheet. And I submit those are not really going to help you. Certainly in an environment like this, where it's very much a trading environment. And these markets are very much responding off technical price levels. So that's the S&P and the triple Qs, which is the NASDAQ. And, they're heading higher, and they're in this very difficult area around where we hit last week. And we may bang that again. And then the next big level will be around 325. So, I look at these levels and trade around these levels. But basically, the market is climbing a wall of worry. Last year, a month ago, everybody was talking about recession. How bad was the recession going to be? Was it a hard landing, a soft landing? And now the market is starting to change. The perception is changing and saying, maybe there will be a soft landing. It didn't seem like it last year. It seemed that we were raising rates faster than any time we've ever done in our history. And everyone thought the Fed was going to break something. And now the psychology is changing. But, it could change again tomorrow. So I trade off price. So I'll look at a couple of charts, and then we can go to the metals. I talked a lot about Microsoft yesterday. And I also shared with you how I bought these call options earlier in the day off Amazon when it looked like, it was going to sail off a cliff. So I'll look at I guess the dailies are fine. So on the top chart, I've got Microsoft. And on the bottom chart, I have Amazon. AMZN, and MSFT is the ticker symbol. But again, this is all about interpreting price action. It doesn't matter if this says natural gas on top, or the euro yen, or corn, or pork bellies. It doesn't really matter what this says up here. This is Microsoft, but you should be able to look at this chart, and it doesn't matter what this instrument is. You should be able to analyze this. And it's all about understanding risk and reward. where to find trades where you can get in, where the risk is very small and the reciprocal outcome is very much in your favor. And so what I try and do is look at patterns and price action. And, if we look at this chart, if we just stand back and look at this thing, it's really kind of everywhere and nowhere. It's kind of been bounded between 240 and 260 for a long time. But within that, there were, very robust moves to take advantage of. So what I do is, this isn't even a long enough chart, is that I look at, what is this market telling me? And we kind of have to peel back to the weekly, and I'll do that. And this has been in a downtrend, but all of a sudden this thing is starting to break out above these downtrend lines. And before it started to break out, there were certain patterns that preceded the breakout that told me that we were likely to break out to the upside. And the pattern actually started all the way back. This stock started bottoming in October. So this is, again, where the market starts anticipating things way ahead of the events. So recently, there's been this whole phenomenon of there's something called ChatGPT. You guys heard about that? It's this new AI program that everybody is, going crazy about. ChatGPT. And basically, it's an AI program. You sign up to the website, and if you're a lawyer, you could say write me a draft on how to appeal my HOA fees, and it will just spit something out. You have an idea on making a romantic song about you and your partner, and you ask it to make a song for you, it will spit something out in 15 seconds. And this is going to revolutionize everything. This is going to revolutionize search. Google and Facebook, their search is based on advertising supported. I think Microsoft is going to eat their lunch because they're going to AI. They're not reliant upon advertiser supported search, and everybody's going to go there. So the market, nobody knew about ChatGPT here, but the market did. The market started anticipating where this thing was going to go. And this, again, supports my thesis, my approach, the entire basis under which I look at markets is that markets are a discounting effect. This market started bottoming in October when the fear was fierce. The Ukraine war was still on, energy crisis was still on, recession was still on. We were falling off the end of the planet. And if you were reading the news at that point, you would have sold everything. But this is when this stock was bottoming. And again, this is, a good example of how the markets are counterintuitive. The markets are ahead of whatever you're thinking. So we made this bottom, and then we came down and made another bottom. And this is kind of called an Eve and Adam bottom, where you have multiple attempts at one support level, and then you have a single attempt there, and then it just takes off. But whatever you want to call it, it's a big, bad double bottom at this 220 level. And what the market was telling you at that point was that there was all kinds of support there. And then all the way up, you had these reversals telling you that this market was going in a northerly direction. Now, a day ago, and this is what I said yesterday, we just ran into a very normal resistance level. So you can see on last Thursday or Friday, or whenever it was, we banged into this area, which every time it hit, it was resistance. But now old resistance is going to turn into new support, I surmise. Market could take off, retest this thing, and old resistance will become new support. But either way, I saw this little itty bitty bar here. And so in my mind, all you had to do was put a buy stop right here above the yesterday's close, put a stop loss below it, and now you had this much risk for who knows how much reward. And this is what I try and do in the markets all the time. I try and find these risk-reward relationships based exclusively on my observation of price. And I kind of did that today when the market was, so what happened was, let me see if I can find it. Show you an intraday chart here. So this is where if you're trading off a 5-minute chart or a 15-minute chart, you have no idea what these markets want to do. So this was the triple Qs this morning. They shot up here and it was right up against this resistance. So and it was just gambling. I bought some puts right here and then it collapsed. And I think I made like 3 times my money in this collapse. And then it came right into the support area. And my bigger vision, as I said yesterday, was we were going to get this sell-off. And then that's going to be a buying opportunity. So that was my mindset. There was going to be a sell-off, take advantage of that quick thing. But then the bigger picture is we were going to get this lift off. So I closed my shorts. I opened some longs. I started buying Amazon down here. And the rest is history. But if you're trying to trade off a 5-minute chart or a 15-minute chart, I mean, good luck. Up, down, sideways, but you can't see the forest for the trees. So when that sell-off occurred, I go, okay, I'm going to buy the triple Qs, and what other garbage can I look for that's selling off with this sell-off? And the stock that was not participating, I mean, Apple took off today, and Microsoft, and actually Tesla was a laggard. But all the technology stocks were lifting off. But you can see, Amazon has had 4 days of a sell-off here. And it was trading right at this area right there. And I go, well, how much risk, can that represent? It's sold off 4 days in a row. It's down 10% off its high. And the market looks like it has pretty good underpinnings. But not only that, you can see that this was an area, this was a logical area. And this is where, again, these technicals come into play. This was a logical area for it to bounce. Now, I don't know how much it's going to bounce. It could bounce and die. It could do whatever. But the thing is, like everything else in life, it's not where you sell something, it's how you buy it. And if you can buy something cheap and sell it a little bit more expensive, that's what I look to do. And so I just use these technical levels to create risk-reward opportunities. And when you buy a call, I just risk, so I spent whatever, $1.36. So that's the maximum amount I could lose. It's times 100 shares. So whatever, $136 per call. I bought quite a few of them. But that's not the point. My maximum loss on this trade was $136 per call option. So sometimes, these option trades are crazy. But, they're with all the volatility, you can lose a lot of money on your other positions. So I trade these things in and out depending on, where the levels are. So you can see that Amazon also started to break out above this long-term trend line. It's now kind of trading in this reverse wedge kind of situation. Probably will take a poke at the old highs. But irregardless, it doesn't matter what the instrument is. This is a trading approach where I look for a pattern, then I look for price action. And so tonight, basically what I would recommend is put a buy stop here, put your sell stop there, and now you have a risk reward trade. And it doesn't matter if it doesn't work out. At least you have a way to get in the market and join a trade. I like to actually buy things that, I mean, this is, kind of showed some strength into weakness, but, I also bought some CrowdStrike on the close. So sometimes I wait right to the close. So I always say to our members, you should, do your trading mostly in the morning, right before it opens or at the close. And sometimes I'll kind of look and see if something closes strong, then I'll just buy that into the close. And so, I'm kind of looking at CrowdStrike. It had a key reversal here. It closed on the high. Actually, I just took a small shot because you still have a little bit of resistance in here. So again, we had a key reversal where it went lower, closed on the high, and I just bought some, surmising that my risk is not that great. These reversals to me show me where my risk is. So again, I know and you can see that we are on the cusp of a major breakout in CrowdStrike. So you can see, look at this channel, how beautiful that is, how it hits on the downside, hits on the upside. And now you've got a key reversal going into what could be a breakout. So this is how I interpret charts based on these visual movings. But, again, whether, if you're not a believer, it's of technical, I mean, Warren Buffett doesn't believe in technical trading, but, look how many times the markets come back to the same level within the confines of a perfect channel. I mean, if you were an architect, you couldn't draw this thing, more perfectly. So I'm always amazed how the market, through all the randomness and chaos and wars and, recession and all this stuff, goes in these perfect movements. And if you understand these movements, you can sell at the high and buy at the low and sell at the high and, etc. And this is what I did with Amazon today. I saw a place on the chart where it bounced, and I'm looking for a bounce off that area. And these technicals do work. So before I move to the metals, is there any questions about any of this analysis, the methodology? Is this confusing to you guys, or does it make sense? So everyone's installing ChatGPT. I didn't mean to get off the topic here. So Christian says it makes sense. Dennis says, I want you to make me millions. Well, sign up, Dennis, and we'll try. What comes first, the trend or the formation? So Sebastian says, great information. So thanks for that, Sebastian. I'm going to ask you for a review tomorrow, so remember that. So what comes first, the chicken or the egg? So to me, what I try and do is look for trends. What I'm trying to do is take a piece out of the middle, out of a move. And what I think my strategic edge is, I like to believe that I can see the horse coming out of the barn, meaning that when you get a change in direction, it's always preceded by a pattern. So you could see you had this uptrend, you hit a peak, you backed off, you hit a peak again, and then you came through the neckline. The neckline is simply a line that's drawn through the pattern. So you have this classic bottom here, and you can see that you cracked through the neckline. So by going through the neckline, you confirm that. Now, this is what price typically does. I said yesterday that, the first, soldiers in a war get sacrificed. Everyone gets real excited. They see the double top, they get short. And then all of a sudden you get a retreat back to the neckline, or in this case, even higher. And then when you went below the neckline again, this would have told me now this is good to go. And this is a top. So once I understand what this market is telling me, that if this is a top, then necessarily this is going to do what over time? It's going to go lower. And so these patterns tell me which side I need to be facing. And then I look for opportunities. So if I think that the market is going to go lower, when I see the market going higher, then I'm going to short into that. And it's just like that today. If I think the stock market's going higher, I use the sell-off today to buy into it. So you have to kind of know which side to be faced, and the patterns tell you which side you need to be faced. And so this, governed this direction for quite some time. But like everything else in life, trends do end. And when they end, they also end with a pattern. So we can see here like this inverted head and shoulders. But what I'm watching out is a change of behavior. Every time this thing banged into this resistance, we sold off. Now, tomorrow, if we start coming out of this thing, it'll tell me there's a change in behavior. And it'll start confirming that perhaps this thing is trying to grab a bottom in here. And along the way, when, if I know that this thing is a bottom, if I know that it's topped out here, then I'm looking for all of the price action to tell me. So this made a high, close on the low of the day. Made a high, close on the low of the day. Made a high, close on the low. We had an inside bar here, many inside bars. And so once I understand, then I use that price action to join the trade and then create my risk reward setup. What is the confirmation to enter after exploring the risk? So basically, the way I do it is that I want the market to confirm what I'm looking at. So today I had a buy stop in Tesla at 198.50, which was above the last 3-4 days high. I wanted the market to confirm, that it was going to go through there. And all day long, it banged up against there, failed, banged up against there. And then at the close started to come up there and then still failed. And it never triggered me. I never got in here. Maybe that'll be a mistake. Maybe it'll open up $30 tomorrow and then I'll be sorry I didn't get in. But I had this pending order in Tesla and it never got triggered. So I let the market confirm what I'm looking at. So this is CrowdStrike. What I would say is, let's say close at 114.60 here. Just put a buy stop in at 115. And then put your stop loss underneath today's low. So now you have a quantified risk reward scenario where you know where to join this trade on the upside, and you also know what your risk is. So that to me is, there's many unknowns in trading. But if you know where to join a trade and where your risk is, that's the holy grail of trading. If you can understand where your risk is, that is everything. Sometimes I'll load up and take a massive position, but I'll know that I have very little risk. When I see a little inside bar like this, when I see 1, 2, 3 inside bars where it just couldn't go higher, basically, I'll just sell this and put my stop loss above there and put on a massive position. So it's all about understanding your risk. And in order to do that, you have to kind of understand what's going on in the market. And you do that, if something's in a well-established pattern, like this was for a while, this was in a well-established downtrend. This was going down and you just had to, sell the rallies. And now maybe it's, going to be buy the dips. And it's going to come out in another way. So, and this is why I look at the daily charts and the weekly charts. I look at the longer term timeframes because I want to understand what is the longer term value of this. What is the longer term scenario? So this is the weekly chart. And you can see that this all started off, with a big double top head and shoulders on the weekly, which started to tell you early that this thing, once it broke here, was going to be in a massive downtrend. So the more information you have, if you're trading on a 5-minute chart, and we saw that today, with these triple Qs, you're trading on a 5-minute chart, you get no history. I can't tell what this chart's going to do. Up, down, sideways, looks like a double top here. I don't even know what I'm trading. But if I back out and look at a weekly, now I can start understanding the cadence. I can slow it down. So the more time you add to this, the more you actually slow down the chaos. When you're looking at a 5-minute chart or an hour chart, you're just seeing things up and down. If I slow this down into a 1-week cadence, then I can start slowing it down and understanding what's really going on here. You can see that this thing is just respecting, and today it just got down to the weekly bottom here. And this was the deal back in October. So everything started to bottom when it all looked the worst. When everyone was talking like the world was going to end, the market was bottoming. And this, again, is evidence why price is ahead of the information. By the time you're trading, hey, Powell might, ease off the pedal, the market's already put on a 20% move. All right, so with our remaining time, I'll just take a quick look at the metals. And again, it really doesn't matter. I use this approach on whatever instrument I'm trading. It doesn't really vary. I look at price, pattern, trends, but everything is based on observation of price and observation of what price does and what it doesn't do. And that's a bit of a nuance, but I'll kind of just leave it at that. Meaning that for many years, gold was really trendless, and it was trading within this trend line right there. It was trading within this pattern. And these patterns, again, can be a continuation trend or a reversal of trend. So when we see a double top and a triple top and an inverted, those are trend reversals. Then we can get all kinds of other patterns that are continuations. You get these pennants and flags and symmetrical triangles and reverse symmetrical triangles. Silver's in this kind of reverse symmetrical triangle here. So those are just patterns that are what we call intermediate patterns. But then there are reversal patterns that just throw the whole thing in reverse. You see a double top here, at 2000, and it sent the market down to 1600. So these patterns work, and then they work for a time, and then another pattern shows up, and you have this triple bottom, and then we go the other way. So that's what the market is. The market is, and you have to determine what is the real pattern, because it will throw you off and throw you patterns in the middle of different things. And I like to believe that's the expertise that I bring to the table. I've been doing this a long time, and I kind of think I understand when the market's trying to fake you out and when it's real. So this was trading within the bounds of what we call an ascending broadening triangle. When the market was going higher, it started out narrow and then widened at the top. Now, typically, these are bear patterns. They're reversal patterns. And my expectation was that we were going to see something like that. But this is when I draw my structure, and then I watch how does the market. And I think this is, if you're considering, joining up, I think this is what I bring to the table. You can go and see these patterns in a textbook. And, I'm not reinventing the wheel here. But it's understanding how to see how the market is responding to the pattern. So it's not really the pattern itself, it's what does the market do within the cadence. So when something doesn't do one thing that I'm expecting it to do, then I know it's going to do that other thing. And so I set up a certain base, set of expectancy here, expectations. And I expected this market to break down, to retest, and then to go lower. But then when it starts throwing me an opposite cadence and I see this triple bottom, but it was not only the triple bottom, it was the price action within this bottom. You made a new low, close at the high, made a new low, close at the high, made a new low, close at the high. Now you also did this there, 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 and there. So in this area, every time the market tried to take it in this area, buying emerged. And you can see this is a weekly chart. So each one of these price bars is 1 week. So every time, the sellers try to take this, by the end of the week, the market was trading at the high end of the week. So that tells you where the buying's coming in. Now you can see up here, they're selling. And now you're just caught in the middle of, a support and resistance. And now we just have to observe how the market navigates this structure, to determine the next path. And sometimes, when we don't know, I just wait for more evidence. So you can see that we're in this tight channel in gold, and either it's going to hold here, or, it's going to start breaking cadence. And either way, I'll figure out a trade. Right now, it's a little ambiguous. When I see a key reversal of this magnitude, I'm not going to get long here and, fight it, so I'll wait and see how this thing consolidates or starts to resist. So what I do is I just draw these structures around prices and then create a risk reward offset. And if I can't see a risk reward, then I'm just going to leave it alone. I mean, you could put a gun to my head now. I could see buying this thing, and I could also see this thing, coming off. So if I can't, understand that risk reward trade-off, then I'm going to leave it. But right here, when this thing closed on the high, this was my risk and that was my reward. I could see that very clearly. So this is what I look for in the market. These opportunities where it becomes fairly apparent which way the market wants to go. And then sometimes we get into these areas now with the stock market trading at these resistance levels where it gets very tricky, where sometimes you just bang, 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 bang against resistance and then it caves in. So I'm not discounting the stock market could do the same thing. We've had this nice move upwards. I anticipated that this is where we were going to break, but, we could also stall out and start going the other way. And price will tell me when it's ready to do that. So, this is silver, and it's been pretty tricky. Silver's been kind of, in this heavy, what I call distribution phase, where, right here, it looked like you had a double top, head and shoulders. You were breaking the neckline. When it broke through and retested, then I expected this. When it started coming back to the neckline, I said, this is kind of a buy-in here. And now it's kind of come back to revisit here. And I don't know if it bounces here or dies. And so, again, when you're not certain, just leave it alone. And, if you really look at it, silver's really been asleep for a long time. Just been trading in this very narrow range. So I always look for opportunities where the market's going to, uncoil in one direction or another. If it's all bunched up in here and every day I'm wondering which way it's going to open up, I'm just going to leave those trades alone. So there's certain trades to, avoid and certain trades to take. So with that said, I have a handbook which kind of explains my 4-step trading methodology. And it's what we call a pay what you want. So that you decide what you want to pay, $5, $20, what have you. And you just come here and all the proceeds. So whatever you decide you want to pay for this thing, I turn around and give it to the American Childhood Cancer Organization. I've, donated tens of thousands of dollars of all my royalties go to the ACCO. Ken says, I bought it. It was amazing info. So thanks for that endorsement, Ken. Really appreciate it. So are there any questions about what we covered thus far today? Any questions on price information or anything that I covered? You know, sometimes I do things so reflexively, I don't know how much is sinking in and how much really just seems like, you know, Chinese. So Ken says, how much is the ideal startup funds to start trading? You know, Ken, everybody has their own different financial situation, so it's impossible for me to understand that, but you shouldn't trade with funds you can't afford to lose. So let's just start there. Mike says, is the key reversal bar, does it need to be an outside bar to be valid? No, it doesn't. Outside bars are nice. You can see that we had an outside key reversal lower in silver. And what Mike's referring to is that you can see the range last week, the high and the low was outside the previous range. Actually, it was outside the last 6 weeks previous range. So this is what we call an outside reversal. And those are even more damning. You can see here was another outside reversal where the high and low of this bar was outside the high and low of the previous bar. So those are kind of icing on the cake. Those do come along. You had kind of an outside key reversal in gold. They can also be fake outs too. I mean, they don't necessarily give you a good thing. Here was another outside reversal in gold. That was a good reversal. Here was an outside reversal to the upside. Both the low and the high was outside the low and high of the previous week. So you do get those, but you know, I don't wait for those exclusively. You know, here was a reversal bar all the way at the top, made a new high, close on the low, and that's all I need to see. When something goes to an all-time new high, you know, right here, this was not an outside reversal. Silver made an all-time new high, close on the low, and it took a while, but you know, that was the end of that up move. So no, it doesn't need to be outside, Mike. It's not usual for you to have an outside reversal. So, I mean, I bought the reversal in Amazon today just based on, you know, it didn't go outside, meaning it didn't go above yesterday's range. This was not an outside reversal. This was an outside reversal. So this started off with a very subtle double bottom in Amazon. And, you know, you can just, and this is why, you know, there's always a question of why I look at bar charts instead of candles. It's just because these guys just stand out to me. When I just look at this whole chart and I just open it up, I immediately just, my eyes just go to that. That's what I see. You know, those guys, every time there was a reversal, there was a new high off that reversal. Now, I don't know if it's going to happen again. We could, you know, kind of go back in here and then turn down. So, but I do think that there's a risk reward trade here where you could buy this, put your low here, you know, and get, you know, some kind of move off here and then wait for the market to tell you if, you know, the move's going to end there. We are getting into a resistance level with the stock market. And, you know, if you get another punch up here, you know, then I would start taking profits up there. So I look at these levels to start, you know, making certain determinations. If I'm long, where to start peeling out. If I'm super aggressive, you know, sometimes I short these things. I did that last week in the Qs. I shorted right at 313 and it, you know, went all the way back to 306. So these markets observe these levels. So Mike says, from what I've observed, so having the stop 20 to 30 points above the previous close. No, that's not what I'm suggesting. What I'm suggesting is you put a buy stop here. So I think the high today is 102.40. So let's say you put a buy stop in at 102.50. And then you put your stop loss all the way down there. So you don't just put it right around the close here. So, and I'll play around with it. To my mind, sometimes I will, play around with a stop that's very close, because if I'm buying this thing, I want this thing to take off. What I don't want to do is have it open and then start reversing. So sometimes I will play around with what I call the unchanged level, the previous day's close. And I might just give it, only a certain latitude underneath the previous day's close, in which case, then the whole thing changes. If this thing starts, trading down here, this is going to change. And, I might prematurely jump that stop and just say, I'm getting the hell out of here. This is not working out. So it's not a science, but just to keep you out of trouble, if you put your buy stop here and your stop loss there, even though this thing sold off tremendously, you're not stopped out. You still would get a chance to get this move if it was going to happen. So, every move has its own cadence and its own objective. And so now we're at the bottom of the channel, and, I would expect that we might go back to the upper end of the channel. Would you keep the stop there or move it? So, moving it, again, it's not a science. It's an art. So Joey says, it takes time for everything to sink in, but you're the best. Thank you for helping me make money. So Joey, thank you. And I'm going to ask you tomorrow to put a review in our review website, or you can go even today, but I'll give you the link tomorrow. If you would like to trade with me, here's kind of a heads up on how you can do it. Just send an email, and one of our sales team will go over everything that we do. I do different webinars. I do a webinar in the morning. I do a Friday webinar where I go through all the markets. So we do, hopefully everything to suit, different interests. But thanks, Joey, for that. How do you secure the profit? Sometimes you just arbitrarily take profits. I mean, in the last 6 months, this has been a really crappy trading environment. And I've been, in my morning session saying to, our members, take profits. If you buy something on the close and it opens $5 higher, take 30% of your profits, because this has been an environment where this is Apple, let's just say, but this was the environment for 6 months where you couldn't hold something for 3 days on the long side and you couldn't hold something on the short side. It was just banging against, all sides of the middle. And so it's also a function of the environment. I'm always looking for what I call trending environments. This is a trending environment where a market picks a direction and, by and large goes in that direction. So this is the triple Qs. And you can see that, for the last 6 months, it was basically, a nightmare trading in here, up, down, and sideways. So I would say to our members, just get in something. If you get a profit, just start taking some profits off quickly, get some more profit, take some more off, and then trail the rest. So now you're getting in more of a trending environment where you want to start holding things like Microsoft, because they're just going to keep going higher. So, where to kind of take a nibble, you have to kind of just look at, okay, where does the resistance start coming in, of a certain stock? So you can see around 320. So when you see massive key reversals like this, they stand sentry over certain levels. So when you get here, I will be buying puts in this area. Now, again, we're in this area where, right here is, some turbulence. So tomorrow we could bolt, like lightning up here, hit this area, and then, you could end the day like this. So there are certain times where, you just got to understand where the risk is. And, but you can see that every time this thing made a reversal, it bounced off. And it did that today. So these, you can just see these reversals, they just stand out. And that's why I don't trade candles. And the markets actually point in the direction. This was pointing where it wanted to go. Humberto says, if you're on a trade, it's in your profit, you should move your stop loss. And with this, yet again, every trade is different. There's no way for me to give you a standard, pat, generic answer. It really is a function of the environment. So when I know the environment is, sideways, like it was for, really through, October through recently, we were in this jam. Everything was going up and down and sideways, and every day you didn't know which way it was going to open or close. So when you're in these kind of environments, it becomes tricky. Once I kind of feel like, okay, here's a bottom. Now I don't want to prematurely get out of something. I've been in these trades for a while now. Workday was opened on the 19th of January. Actually, we had two positions open in Workday, and I closed one out for a $19 profit. Now this one is going to be in for like a $15 profit. Bank of America is up, Qualcomm is up. And all of these positions have been open for a while. So there are certain environments where now you just want to let that thing work for you. Like Qualcomm. I've been in this thing for a while. And, it's been banging around for the last couple of days. But you don't want to just prematurely get out, because this is a trade that's probably likely going to keep working. This is, thing looks just like Microsoft. Made the low back here, made another low, took out this neckline. And so this thing is good to go. Yeah, little narrow range bar yesterday. So again, the way I look at these narrow ranges, that represents a coiling, a storing of energy. And to me, the energy was going to go in the direction as indicated by the preceding pattern and trend. So all you have to do is put your buy stop right there above yesterday's high. It sold off this morning. All you have to do is put your stop under the low, and now you're into a trade. But I've been in this trade for a while, and I want to see if it just keeps working. If something's going to keep working, why get out of it? So now, I'm looking at this thing wants to go to the top end of this channel. And, this is probably the next logical place it wants to go, around the 145 area. And maybe a lot higher. All right, guys, I'm going to end it there. I hope you got some value out of this, and I will be back tomorrow at 4:30 Eastern Standard Time. Thanks, Ken. Really appreciate that. John, Francis, thanks, everybody. Dwight, thank you.
All right.